Hello, everybody. I'm your host, Mike Downer, and welcome to Do You Want Cheap Insurance or Do You Want to Just Be Insured? So, this is brought to you by Absolute Insurance Agency. I am here with Jeff Eastfold, the president, and his trusty right-hand man, Dan Bell, the vice president. How are we doing today, gentlemen?
Doing great.
Doing awesome. How are you?
I am doing great. So, we're going to be covering some timelines here, gentlemen. I know that buying a house, honestly, it's the biggest purchase most people make in their lives, is when they buy a house. It's probably 95% of the population. It's their biggest thing. And when you get that home and you're making such a huge investment, and what's going to hopefully be your forever home, you want it protected. So let's just say I bought a house in West Des Moines. We're going to be talking about who can get me homeowners insurance fast. I want it quickly because I want to be covered. So let's just jump right into this. And let's just say someone closes on a house in West Des Moines in 10 days and has no homeowners policy. What happens now?
Well, they better give us a call. That'll be the first thing they need to do. Contact Absolute Insurance Agency here in Clive. And then from there, we're going to collect a lot of information and we're going to be able to get that policy put together for you. Now, in a lot of cases like this, that person who's buying the house in 10 days,
yes,
they have no previous insurance, means
correct,
they probably haven't been a homeowner before.
Correct.
They're going to have a lot of questions. They have no idea what they're walking into, and they're not understanding the total different variants and coverages that are out there. And that's where we're now, granted, there is a timeline here. There's a deadline that needs to be hit, but we do, even in this scenario, want to go through and make sure that the future homeowner, their biggest asset, is going to be covered to a point that they understand what is and is not covered. Right. So there's still an educational portion that has to go in on these first time home buyers.
You bet. So you're able to handle that. So, which is really nice. I know that I saw you cringe a little bit when I asked you that question, but if it's one of those quick close 10-day deals, or there are people in this world, that procrastinate. It's just a fact of life. It's just math. People procrastinate and go, uh-oh, I better do this. Or my mortgage company is saying, where's your homeowner's policy?
Right.
Those are the scenarios that would happen. So let's just say that I am that first time home buyer. Say that I'm younger or, again, a procrastinator. And I come to you and say, oh, shoot, I need to get this done quickly. What do you need from me, the home buyer, to be able to quote it?
You bet.
Your personal information, obviously some details about the house. Roof year is a big factor. I mean, the newer the roof, the better the price, more open to more carriers. Basement finish, if it's finished or not finished, the exterior of the house. And there's a lot of different underwriting factors that we look at. And obviously with the basement, that's one thing, like people don't think about water backup of sewer or drain, so it's time to find out that you don't have that coverage. It's not when you have 2 inches of water in your basement and you're sloshing around in your carpet. So yeah, we try to do take the extra time, especially when it's a first time home buyer, to go through a lot of these endorsements and options just because, they don't know.
Oh, absolutely. I remember when we bought our house for the first time, I really had no idea. I just said, okay, the house is worth this much. I guess that's the coverage. I didn't know.
Yeah. And you get into scenarios too, where, there's situations where the lender says, well, your insurance should run you about $100 a month. So in their mind, they're already told that it should be run around $100 a month. Well, that number's probably not accurate.
Right.
That'd be like me quoting an interest rate. Right. Like I don't have the authority or the knowledge to be able to say that. It's just not in my wheelhouse. But yeah, going back to what Jeff says, we're gonna when we get this information, these first time home buyers, they're looking at what it is to buy the house versus what it is to replace the house. And
Yep.
that's what matters. We want to know what it's going to take to replace the house. You have three different values on your house that as a property owner, you should be aware of. You have your market value, which is of course what you can sell it for. You have your assessed value, which is what you're taxed on. And these things are not always identical.
They're not even close usually.
Right. And then the assessed would like it at the market value. And we don't want that.
No.
But for us, there's only one real number that matters, and that's replacement cost. We're not here to sell your house. We're not here to tax your house. We're here to rebuild your house at your worst moment. And
Perfect.
that is what we have to do. And that's what we have to explain to the homeowner, because sometimes they'll purchase older homes that, here's a situation where the cost to buy the house is actually less than the cost to rebuild the house.
So what kind of documentation, when I said, what do you need from the home buyer, what kind of documentation should they be prepared to give you? Because again, this scenario is that whole 10, 12-day turnaround thing. What kind of documentation should that homeowner be prepared to bring into you? Facts, I almost said fax. Oh my goodness, how old am I?
You can fax. We do have a fax line.
I guess fax you, email you, bring into you, carrier pigeon you. But anyway, what kind of documentation are they going to need?
The primary things here that we're going to really need, the personal information's very important: name, date of birth, social security number, marital status, the other names of the title holders on the house itself, occupations, educational level. All this stuff gets built into algorithms that produce rating factors. But primarily, we're going to pull a lot of information from public resources, such as Zillow. And there's a lot of times there's disclaimers from the realtor, and we have to go through the fluff on that because that's there to sell the house. But also county assessor pages are very valuable pieces of information for us. But we do need, at that point, to still address information like maybe there's been something done to the house, like a finished basement that wasn't not a permit pulled.
Huh.
Or changes to the deck or things like that just the assessor isn't necessarily adjusted annually. But
Roof year.
roof year is the number one documentation piece we would need. Is if that roof was replaced, let's say it's an older house and that roof was replaced in the last 2 or 3 years, either the seller disclosure would state that, or they'll have copies of the roof invoice, and we'll need something to that effect, because those roofing isn't something that requires a permit to be pulled, so it wouldn't be notated on the county assessor pages.
Perfect. Well, that clears that
Especially
up.
if it's a UL4 rated roof, hail impact resistant, or some carriers give a discount for UL3. So
yeah,
we try to get that just because it does make a difference.
Yeah, that makes sense.
I mean,
the shingle
$150 a year, and sometimes that UL4, UL3 discount will get bigger and bigger as that roof gets older. So, I mean, over 10 years, that's a lot of money.
Yes. No, that makes perfect sense, because your shingle type, I do these podcasts with roofers too. So yeah, that is huge.
Yep.
So how much homeowners coverage does a West Des Moines buyer actually need? I know it's a broad question, but kind of give us the formula.
Well, it's the cost to rebuild their home. So we'll go through the replacement cost estimator, which is basically take the square footage of the home, the year built, the features, number of baths, exterior, and it comes up with calculate the cost to rebuild the house, to build a new house with deductions for excavation for the basement, foundation, driveway, running the sewer from the house to the street, because that's all still there. So if a tornado came and ripped that house and it's gone, I mean, the lot's still there, the driveway's still there, the sewer is still buried. So I mean, we're just talking about rebuilding on that same land. That's where we get into problems with, acreages, somebody might pay, or a lake house, right? The land is worth a lot of money, but the land's not going anywhere.
Right.
So
Right.
If
Yeah.
you think of it that way, like to build a house on a lake that somebody paid for $700,000 is the same as what it would be to build it in town on a normal lot. I mean, it's, they might have paid 300,000. That's because somebody's paying for that land.
And it's a good idea to have these values of your house reviewed periodically as well, just because, heck, when I started doing insurance back in 2005, anywhere between $120 and $150 per square foot was pretty appropriate for most housing. Now you can't build anything for $120, $150 a square foot. You're into the 250 to 325 range for most houses in this area. So it's important to keep up with that. Make sure that your homeowner's policy, while it should have an inflation guard built into it, that inflation guard is actually staying in lockstep with the actual cost of materials and labor in today's world.
No, that makes sense. So, let's say that I am a first-time home buyer. What's the biggest mistake, and what do first-time home buyers in Iowa most often get wrong? What's their biggest mistake when it comes to insurance?
They worry about cost over coverage, number one. That is the biggest mistake that they make. They don't understand the coverage. For an old thing, if you don't understand it, don't buy it. Right. And they're not understanding. There's carriers out there that are going to do a strip down policy, and that strip down policy has very negative impacts on the homeowner. For instance, a lot of times it can be scenarios where they don't have replacement cost on their contents. Maybe the roof is still relatively new, but the policy still reflects an actual cash value basis on the roof, or a roof payment schedule, or something to that effect. Not having any endorsements that are going to provide coverage for water in the basement from the sump pump failure and things like that. These are big deals that, when all they're doing, looking at that bottom line in order to get the mortgage, in order to get into the house, can become highly problematic that the first couple of years when a claim presents itself that they're not covered for.
Yeah, we see, some people like with really high deductibles, or the house is just underinsured. I mean, I had somebody that their house was hit by a tornado a few years ago, and it was a 2-story. I mean, it doesn't really matter, but they had nowhere near enough coverage to rebuild their home. I mean, they went from a 2-story house to like a modular home.
Yep.
Story. I mean, because they just didn't have enough coverage.
Yeah.
And the other agent was basing it off of the market value of the home, or rather than the replacement cost. I mean, those are the people you see on TV that don't have enough insurance.
Yeah.
They're just buying the wrong policy, or they're not buying a policy with, 150 or guaranteed replacement cost,
Yeah, when you were talking about deductibles, I think that is one of the biggest mistakes my wife and I made in the very beginning. Was we saw that we could save X amount of dollars, and this was so long ago I don't remember, but I do remember that our deductible was higher than what we would have ever been able to afford, but we did it to quote unquote save money. And guess what? We had a kitchen fire.
Ooh.
And I ended up having to do a lot of the work myself because our deductible was so high. So we got that switched right away, realizing that quote unquote saving money ended up costing us a bunch.
Yeah.
So
there's
at least you could do the work by yourself. I mean, there's other people that are not going to be in that scenario.
Well, me and friends, I had friends come over, and I had to take the insurance check and go buy stuff and do it. I mean, it wasn't a bad kitchen fire. It really didn't. I mean, it wasn't devastating, but it was enough to where I had to do a lot of it and not hire somebody to get it done and done the way I wanted it to, because we didn't have the money. We just didn't.
And the fire is wild, because the fire does a certain amount of damage, but then there's smoke that does a lot of damage. And then, there's water that comes into play, and that does a significant amount of damage. So fire.
Yeah.
But the fire didn't ruin the fireman's hose will.
I didn't have to have the fire department, so it wasn't one of those. It was a small kitchen fire, but then again, that almost made it worse. It would have been better if it would have been a huge fire, because then
the deductible would be so bad.
I could have found a side company to maybe do the work cheaper and try and get some of that. But yeah, I mean, since it was a small fire, there was only so much. Like I said, I'm not going to get into dollar values here, but
Yeah.
my deductible was bigger than what I wanted it to be because it wasn't that much damage. So my insurance check was fairly small because of my high deductible, and it was just a small fire. So anyway, I'm kind of on you guys' side here. It's like if these guys say, hey, you need this and only do a $1,000 deductible, don't put a $5,000 deductible on your homeowner's insurance. Take it from a guy who's already made that mistake. So listen to these guys. They know what they're talking about.
And there's diminishing return on increasing that deductible, right? Like at some point you look at it like if I do 1,000 versus a $2,500 deductible, how much money am I saving versus what are the chances of a claim and what's my recoup period between if I had a claim in the first 3 years, does it make sense to have done? Right. So,
right. And thing about it is those numbers don't matter. If you don't have that deductible amount in your checking account, it doesn't matter. I can pay a little bit over amount of time, even if it's more than that X dollar amount. Making the payments, it's almost like interest. It's fine. Listen to these guys. I'm telling you, when they give you advice, if you don't have that dollar amount at all times in your checking account, listen to these guys and do what they tell you to. That's just my unsolicited opinion here.
Well, you also have problems too, that if you don't fix that damage, like, the insurance company is only going to give you so long to get things repaired. Because
I had to send pictures.
Yeah. Yep. Well, especially like you're talking about, say, the exterior of your home. Like you got a hole in your roof, you don't have the money to cover the deductible. They're not going to keep insuring a home with a big hole in the roof.
No.
Now you're going to have water damage. You're just going to have more problems, more claims. So
yeah, just when these guys are asking to give an honest assessment of your financial stability, give them an honest assessment and then just do what they tell you. I mean, it's just going to be better that way.
One place we see a lot of people being underinsured would be townhouses and condos where there's an association that insures the exterior.
Yes.
But the homeowner, the buyer, is responsible for the inside, studs in, basically drywall in.
Yep.
Like I just had one that, bought a 2-story condo. I mean, do you think he had $30,000 of interior coverage? I mean, that could be his kitchen.
I was going to say that's my
okay.
Yep.
Small bathroom.
Yeah. It was just like, wow.
Yeah. And how that form works on the insurance side is it's a following form. It's Homeowners Form 6, HO6, and it follows to pick up where the master policy ends. So they're going to pull a copy of that master policy and figure out what the insured responsibility is at the time of loss.
Yeah.
And a lot of times you'll see it like there is no way you could cover the drywall, the fixtures, the trim work, the carpet. I mean, a lot of these places are, anywhere between 1,000 and 2,500 square feet. If you see things on there at like 200,000 on a 2,500 square feet, it might be underinsured. So, yeah, just depending on what that reads in that master policy. So know that
you sat down and you talked to your homeowner. They've listened to you. They've listened to our podcast, and they said these guys know what they're talking about. Let's do this. What kind of turnaround time are we looking at from when we give you the call? You said sometimes you can get back to them that day or the next day. How fast can you turn all this around and get that thing active for people?
Yeah, same day or next day in most cases. I mean, outside of like these circumstances that like underwriting concerns or the client has prior claims in a scenario where it's a first time home buyer, they don't have any of that, so we don't have to worry about it.
Right.
But they could be buying a house that has wood burning stoves and other extracurriculars that would make it very difficult. Not difficult, but more complicated. But for the most part, I mean, you're talking within the same day to the next morning. So
Okay. So if you are a procrastinator, you've got them covered.
Yeah. So when we get done with our quotes, I mean, we're pretty much ready to issue the policy. I mean,
Okay.
finalize a few details like who the mortgage is with, but I mean,
Yep.
so when we get our stuff done, it's done. I mean, like
there's no leading number. Like, hey, yeah, this is the number we can get you. You get that in the mail all the time. You can get your homeowners for $400. Like, can you?
Yeah.
Really?
No, you can't.
Like, we've done all the work, ran all the reports. So I mean, it's ready to go. We're not, trying to hard sell somebody like, oh, you had this or this, and now it's another $300, and we didn't see this claim. Now it's another $200. I mean, we don't do that at the time of sale. I mean, it's done ahead of time. Just
Perfect.
respect. We want to respect their time and also, our own. So.
Yeah, here's your options, guys. A, B, and C. We recommend this one. What do you guys think? Let's write her up, get her in. And so even if I am a procrastinator, call you guys, you're prepared, you're ready, and you can get that taken care of so they can get into their house.
Absolutely. And
awesome, guys.
Do so. Yep.
Perfect. Well, let's say that I'm that procrastinator. If you are looking for homeowners insurance, you're like, uh-oh, these guys are the guys to call. They'll turn your uh-oh into a oh yeah.
That's what we do.
Heck yeah. All right, guys. Well, thanks again for clearing it up. I look forward to the next time we talk. Jeff, man, a few words, but every one of them is gold. So that's what we love about him.
Yep.
Well, thank you so much for having us.
Hey, thanks, guys. We'll talk to you on the next one.
You
All
bet.
right. Bye.